Chris, thanks very much for joining us. Just for those who don't know, just tell me a little bit more about real assets at Aviva Investors.
Aviva Investors has a major presence in real assets across Europe, across real estate, infrastructure and private debt. We have significant real estate exposure in the UK, where we're one of the largest landlords, and a good amount of exposure across Europe, including Paris, where we own one of the strongest office portfolios.
And you've recently issued a report in terms of coronavirus and the impact on European real estate. I guess what were some of the key thought pieces that came out of that?
We have to recognise that it's a multifaceted crisis. First and foremost, it's a health crisis. It's also a crisis in the sense that we can't go about our normal economic activity at the moment, or indeed our social activities. Policies of suppression are placed upon us, and we have to practice social distancing. And that, of course, is going to have profound impacts for the economy as well. So from a real estate perspective, we're initially thinking about what does that mean for the sustainability of income, and that's going to vary quite significantly by different sectors and different geographies.
And you mentioned in the research that the short-term response was really crucial, and I just wanted to pick up with you how you felt governments and I guess also the G20, their actions had, I suppose, how they helped influence it from your point of view.
I think it's been very positive that governments and central banks have acted quickly and at scale. There's a huge range of policy measures that have been put in place. From a monetary policy perspective, central banks have been quick to act. I think reducing interest rates and boosting liquidity has been a positive. They've reduced the risk of contagion to the financial sector, and things like lower interest rates will provide a boost to the economy when we get towards a recovery. There's been large fiscal packages announced as well. Generic fiscal packages as well as interest rate cuts are quite blunt tools for this crisis. And while they're a positive, I think what's critical has been the measures taken to support businesses and individuals through this crisis. Their governments have done a lot across Europe, and perhaps more importantly, they've signalled a willingness to do more. And so we can expect to see more action as this crisis evolves.
And I was interested to read in the report as well about you seeing this very much as a crisis around solvency.
Yes, I think that's right. I mean, the global financial crisis was a liquidity crisis. It was born in the financial sector, and that threatens a solvency crisis. This is a pure solvency crisis. Businesses can't go about their normal activity. What policymakers are trying to do is effectively press the pause button on the economy, keep everything in deep freeze, and then quickly thaw it at some point in the future. And if successful, that will probably mean the least damage to the economy and less damage to the income streams of real estate investors too.
I mean, that's interesting. And there's obviously a lot of discussion around whether it'll be a V-shape in terms of there being a strong downfall and then a fast recovery. What's your sense of that? And also, how do you see, I suppose, the different sectors and the influence on those?
I mean, I think the truth is that at the moment we just do not know how long this crisis will last. We do not know how long we will have to practice social distancing, and when that comes to an end, exactly what comes next is also unclear. It could be a period of adjustment. It may not be the case that we can flick a switch and go back to the economy running at full capacity. This crisis is having a different impact on different sectors. Some of the sectors that were impacted hardest and earliest were things like the hospitality sector, restaurants and retail. Certainly any real estate that was dependent on travel and tourism was impacted early and hard. But we're now seeing the crisis ripple through to other sectors as well. Over the longer term, I think the retail sector does look exposed in that often cyclical downturns serve to accelerate structural trends, and we already saw parts of the retail sector looking weak. In contrast, it's possible that logistics operators and manufacturers and retailers seek to add resilience to their supply chain, which may involve increased investment in logistics facilities.
Do you think there'll be differences, longer term influences in terms of office structures and working from home?
I think we can expect some change. I think some people will be working at home for the first time. They will have acquired the technology to do so. They may be finding that it works well for them. Ultimately, I'm a believer that to do high value add economic activity, to do problem solving and idea creation, nothing beats face-to-face interaction. And so I think what we may see is that offices are increasingly designed to facilitate that, with more collaboration area, perhaps more meeting rooms, but perhaps there's a lower requirement for people to be sat at their desks doing routine tasks, which can be done remotely.
And just in terms of Aviva Investors, obviously it's a challenging time for everybody, looking at the asset management, portfolio management. I suppose, how do you see the positioning of that?
So there's no doubt that it's a challenging time. I think one thing that positions us relatively well is our focus. We've been moving towards focusing on a small number of specific locations and holding fewer larger assets in those locations. And what that does is give us stronger relationships with our occupiers, so we can work with them to maintain the income and protect the value of our assets, and stronger relationships with the stakeholders in each of these localities, which should help us identify and exploit opportunity once this crisis is over.
Great. Thanks very much for sharing your insights with us today, Chris.
Thank you.